Art Collins with you. A little something different today. Let's do something in the currencies. Okay, that's the sector that tends to be especially good at trending, which means that if we were to just use momentum-based systems on it, we should do well. As always, I like to demonstrate points with something basic, simple. Let's do that with the N-day system, the classic system, where you buy the highest high of the last N number of days on a stop. You sell short the lowest low of the last N number of days on a stop. And the stops are just new entries to reverse and go in the other direction, making this a perpetual long or short system. Now, one thing I really like about that is that means that as cretinously simple as those stops are, they're not arbitrary. They come out of the action of the market. So you're on the wrong side of a position, you're going to get corrected as the market does something dynamically. All right, so what we got here is daily bars in the Swiss franc, 24-hour sessions, okay? And it goes from the beginning of 2010 through June 9th of 2020. Here's our basic little formula. You don't get much more basic than this, but simple will work, folks. Buy next bar highest high and stop. Right now we just arbitrarily have 5 days in there. Sell short, next bar lowest low and stop. Put the system into the window. And visually we can confirm it's doing what we expect. Selling on the lowest 5-day low, buying on the highest 5-day high. Looking good. We're going to expect probably not the greatest percent profit because pure momentum systems operate by taking a series of losses, quick, relatively short, and then they catch that big breakaway, and that will dwarf many of the losses. So that's how that works. All right, so we got that in there. Let's optimize it. Let's go between 2 days and 20 days. Let's make sure we're going in the order of best return on account. I think we are. Okay. And, well, coincidentally, 5 is the best. We see affirmation in the surrounding numbers. All right. So this is the performance summary. Not bad. 73,000 over those 11 years on 304 trades. $242 per trade before slippage commission. As I said, percentage profit. It's only 40, but that's certainly within expectations. $21,000 worst drawdown. And a return on account of 351%. So your account would have increased 3.5 times had you started out with the $21,000 worst drawdown figure. All right, so a little quick presto changeo here. Let's put the European currency in there. All right, not a great system there, but we got affirmation. We got affirmation related to the Swiss franc. And then finally, let's look at the Japanese yen. Okay. Further collaboration there. As always, I encourage you to take this into your lab and tool it, make it a little more trader friendly. Obviously, these drawdowns are pretty big. So, to reiterate, our system was buy the highest high of the last 5 days on a stop, sell short the lowest low of the last 5 days on a stop. I have to admit, I'm a little bit surprised, given that we know the currencies to be trending, that the numbers are low. Our best performers were in the low range. But the quick turnaround is actually an unseen benefit because, again, if we're in a losing trade, we would rather the thing flip around quicker rather than taking longer. So shorter number of days ensures that. All right, so again, tool around with this if you're so inclined. Good luck. Until next time.